If you entered in on any of these three candles, you're gonna have to stomach the pullback. And I entered in, and I'll set my stop loss just below this most previous area of support. Because theoretically, guys, theoretically, it should never dip below that support. If I did what most people do, which is enter in when it's breaking out or trying to chase. Again, guys, look at the stop. The stop is way bigger. You tend to lose more money. There's no reason to lose that much money. Guys, let's be real. Finding a trade setup is very easy. Following a trade plan, identifying a break of structure, seeing a very simple bounce is so easy to identify. Anyone can do it. Finding the proper entry, having balls to enter, and having full confidence in your entry is vital. Anyone can spot the trade setup. Anyone can spot the trade plan. Anyone can look back and be like, man, coulda, woulda, shoulda. But did you take it? No, chances are you didn't. And it's because you probably don't know how to enter. You probably don't know when to enter. Let's break it down real quick in this video on how I use the break and retest to my advantage. Now, very simply, real quick, very brief. The higher the time frame, the stronger the move. So what you have to do is identify a trade setup, a trade plan on the higher time frame, and then go down to the lower time frame, such as the 5 minutes, to identify the entry. For an example, we're going to break down this very simple 30-minute break and retest trade on silver, as well as even identify entry. Talk about one being a bad entry, as well as one being the entry that I got, which is very simply the break and retest. One makes you have FOMO, fear, greed, all the emotions, while the other one gives you full confidence in your trading ability, your trade setup, and everything you can imagine. So let's get right into it. So again, guys, everyone knows how to identify a trade setup. Everyone can say, man, coulda, woulda, shoulda took this trade. I saw it being bullish. I saw a building price action to show it's going to go more higher. But the thing is, and the difference between a profitable trader and an unprofitable trader is the profitable trader takes the risk. Even if worst case scenario, it stops them out. It is what it is. So let's talk about that, guys. Very simply, again, we all know what a breakout is, a break of structure or a breakout above previous highs. You can see on silver on a 30-minute time frame down here, very simply 30-minute time frame gets a nice breakout candle here. Then what do? You could also even trade on a 30-minute time frame without even having to go to 5 minutes. You can literally just take the entry around the support. But again, I'm trying to help you guys identify entry. A lot of people dislike watching the higher time frame, which is fine, and they want to trade the lower time frame, which is also fine. But first, you need to identify a trade setup on the higher time frame, and then you need to go down to the lower time frame to find the entry. So yes, I do enjoy myself being on the 5 minutes. It's fun, it's fast. But all in all, I'm really watching price action on 30 minutes because I need to see the actual trade setup, the actual trade plan. I need to wait for confirmation. And in this case, guys, you guys can see confirmation candle breakout, right? Then you drop down to the 5 minute time frame and wait for a pullback entry to this general area. So let's talk about that. Where is the pullback? The pullback is this area right here. This is where you want to enter. Hindsight 50-50. A lot of people want to say, man, coulda, woulda, shoulda took that. Nice bounce on the support. All this nice stuff that people always talk about. But the difference between me and a lot of other people is the fact that I do take those trades. I do like slapping entries. As you guys can see, my orders there. And again, I like to risk it. Worst case scenario, I lose out on some cash. Boo-hoo. Doesn't matter. Very simply, on the 5 minute time frame, let's talk about it. Not only earlier on the 30 minutes, I show you guys that we got the confirmation of a breakout candle, but then you go down to the 5 minutes and identify the entry. A lot of people are doing something terribly wrong. It's going to eat you guys. It's going to bite you guys in the butt, whether you believe it or not. A lot of people are seeing a nice breakout and they're seeing the candles go diabolic and they believe that they're going to miss out. So what do? They enter. Just randomly at the top. No candle, pullback, no nothing. They just enter. The issue with that, guys, is this. If you entered in on any of these three candles being, pushing up very strongly, you're gonna have to stomach the pullback. Whereas somebody like me, who I keep saying, enter in on the pullbacks, guys. Enter in almost where your stop loss would be. Enter in where the market is dipping so hard to where you believe yourself, wow, it's dipping so hard, there's no way it keeps on dipping. So in this case, you guys can see, very simply, we got the breakout on 30 minutes time frame. 5 minutes, we're watching price action. And guys, what does it do here? Literally, this little area was most previously a resistance. Now it's acting like a support. 5 minutes, it's even showing you and giving you that confirmation. Now look, not only did on the 30 minutes we confirmed that we're breaking out, but also even on 5 minutes we broke out. And also again, the candles are even telling you too. Look, we're holding this support. Long wicks is downside, indicating that buyers stepping in. These are hammer candles. A lot of people don't like to read candles, but really, this is genuinely price action. Candles represent the price, the movement in price, which is mind-blowing to me. A lot of people trade. A lot of people don't use candlesticks to their favor. And a couple things you could do to enter is this. So yes, you can watch price break out, correct? Two things. I have two entry models when it comes to this kind of stuff.
A lot of times I like to just enter in the moment it pulls back to the general area. Worst case scenario, it keeps dipping down just a little bit, but it should never theoretically dip below the support. And if it does, guess what? I exit. So if my entry was this dip around here, right at the support area, and I entered in, then I'll set my stop loss just below this most previous area of support. Because theoretically, guys, theoretically, it should never dip below that support. It's supposed to hold this general area, aka break and retest. But in this case, guys, you guys can see I entered in and it never went below support. I took it for a quick scalp, in and out trade of $300. Whereas if I did what most people do, which is entering when it's breaking out or trying to chase, again, guys, look at the stop. The stop is way bigger. You tend to lose more money. There's no reason to lose that much money. All you need to do actually is find a better entry. So even if you miss this hammer candle here, which I entered in on this candle here, reason why is because the second model is this. You can also, instead of entering it right away, is just watch price action. You can see what the candles do. In this case, it formed a hammer. Next one also formed a hammer. So I was like, you know what? There is no way this thing doesn't bounce. And if it doesn't, boo-hoo, I lose just a tad bit of money. Not even that bad. So we entered the trade, literally immediately just ran to profits, guys. So guess what? We just collected it. Never once went to draw down, instantly just collected profits. So very simply, that's how I use the break and retest to my advantage. It's that simple, guys. Nothing too complex, nothing too serious. It's that simple.